Ladies and gentlemen, what's going on? Welcome back to TCP for episode 53. Another really awesome guest for you guys. Ready to get into this episode? Last time on, we had Ramsey. Was awesome catching up with him. We're back to interviewing traders outside of Kane Cap. So let's do this. Noah, how you doing, man?
Alejandro, I'm doing great. I had the pleasure of speaking with Matt yesterday. He's a great guy, great trader, great platform, and a great story. And so it was kind of a no-brainer, to get him on the pod and really share that story and that knowledge that he's got for us. And so I'm excited for this interview today.
All right, as you mentioned, we've got Matt Cowart with us, Traders Paradise, CEO and founder of Rocket Scooter. How you doing, man? Matt, welcome to the show. Excited to have you on.
Hey guys, I'm glad to be here. Thanks for having me.
So, how we're going to start this off is just by asking you about your trading journey, how you got to where you are today, just so the listeners and Noah and I can gain a little bit of background on, how we're sitting here talking to you.
So my trading story. So my background was in chemical engineering. I went to school, got a job, just the kind of the same thing. Didn't know what I wanted to do, but got into engineering. And just like anyone else in 2009 was victim of the financial crisis. I was working at a chemical plant and I got my first exposure into commodities because I worked at a unit that used catalysts that had metals in it, and we would study the metals markets to try to price in this really expensive stuff we'd buy. And I really got obsessed with learning about how markets worked. And when I got laid off, obviously 2010, I got a little severance package, which was kind of a neat starting point to getting into trading. A buddy of mine traded penny stocks, talked to me about it. It seemed a little not my style, but the exposure to commodities and then the exposure to him talking about trading, I just dove right in and kind of just winged it for a little bit. That is brilliant idea that when banks are getting bailed out to buy bank stocks, and it worked for a while. And then keep buying at the top and the market would turn around and go against me. And I had no idea what I was doing for, a couple of years. And I think that's everybody's story. I was just determined though to figure something out. I mean, I had this ego. You traders, it's so hard when you're a trader to get over your ego. You think you're smart at school or good at your job, but then you go out to work, you're doing okay. Then you get into trading, you have no idea what you're doing. And it's really hard to get over those, um, I guess those hurdles, right? Because whenever you're used to being okay at something, and then you get into something and you think you're going to be great at it and everyone else is doing great and you don't know why you're not, it's kind of a hard problem to get over. So after a couple of years of battling that, I just never knew how much it was going to affect me in my trading. So I was always on this journey to trying to figure out my own way to do things because nothing I tried ever seemed to work for a couple of years. And fast forwarding down the road, I mean, we led down this entire path of creating a whole new style of trading for everybody. And then, of course, Rocket Scooter kind of came out of that. The journey was really awesome. It was really almost, I guess, kind of like self motivated to not fail, and of course, figuring out something that was working for me instead of something that was common for everyone else was almost how I've always lived my life. So I was determined to figure out my own way to do things, and that's kind of where I ended up now.
No, I think I'm in good company here being an engineer. This is like the third or
Oh,
fourth
no way.
engineer we've had on the pod. Yeah, so I studied
So
engineering
many of us.
myself,
Yeah.
but it's no, it's funny. Engineers turn traders. I guess it's a more popular thing than I originally thought. Yeah, so
Yeah.
2008 comes around, 2009 comes around. You get laid off, unfortunately. You start trading stocks. What did the journey look like? So initially, I'm assuming you were making a little bit of money, which is kind of the hook.
Yeah.
That's what kind of gets everybody going. It gets exciting. You see the possibilities. It becomes very enticing. Did you ever have that point where you were very close to, I can't do this.
Yeah.
This is just too much.
I call it my folding towel story. I was buying bank stocks, that was the bailout. So it seemed like a no-brainer, right? And everybody was making money until the market turned around. It was my first five-figure loss. I was maybe like 26, 27 years old. And the market was just crashing against me, right? I was buying like Citigroup and Wells Fargo and some other stocks, and the loss was once it hit 8, 9, and then 10, I didn't know what to do. So I was folding laundry and I had this pile of towels on the floor behind me. I was just folding them up. And then I'd go do more laundry and fold them. Then I go take my clean towels and then wash them just to fold them. And I just literally sat there like peeking over like a pile of towels because I didn't want to stare at the screen. I didn't know what to do. It was a temporary moment of insanity. And I was like, man, I don't know what's going on here. But it was my first big loss. And it was almost like months of work gone in a day. And then it's just one of those eye opening experiences. So I love telling that story.
Yeah, that's a crazy story because I feel like everybody sort of has that moment where I feel like when we all get into trading, we all say, okay, you
Yeah.
know, I have a risk tolerance where I know that this is something that, you win and you lose. And if I lose, it's a very real possibility. I'm okay losing this amount of money. And then once that level gets breached, it just feels like everything you've ever learned is just gone. It's like you become like numb to like
Right.
wait a
Right.
minute, like what is going on right now? Almost like it's not real. And I feel like sometimes, especially in the moment, those can be really dangerous times,
Yeah.
especially if you don't sort of, snap yourself out of it quick and maybe cut your loss or, create a game plan for how you're going to get out of this. But looking back in hindsight, like you said, it can become moments that really truly become inflection points in your trading career. And it seems like that's what happened for you.
Absolutely. And I mean, when it comes down to it, having no way of, I guess, self coaching and having risk management out the door is almost what led us down the path to making Rocket Scooter because the platform is completely centered on risk management. And I think it was moments like that that really led me to believe that traders spend a lot of time over trading, and that's one of the biggest problems. And not a lot of people have rules that keep you from over trading. You spend a lot of time. The more you do something, especially in the advantage is not with us as traders. Our job is to kind of take a few dollars out of the mouths of the big dogs out there. And the more you play, the more that advantage against you stacks up. It's the law of large numbers, right? And I love to tell the story is that if you ever, meet LeBron on the street and you want to challenge him to a one-on-one game, you play best to one and you ask to shoot first so that you can sink that ball and then you leave and never play again so you can tell people you beat them in a game. But the more you play, like 999 times out of 1,000, you will lose that game, right? And trading is the same way. The more you do, the more you're going to lose. And I think I paved my way from experiences like that to do less. And a less is more mentality is almost what kind of fueled me to create all the stuff that we did create. And you'll hear me if you ever listen to any of the spaces or other podcasts I've been on. People, we had this one where they asked me, what trades are you in this week? And very often during this bear market, I've had the least sexy answer. Well, I'm just sitting out this week. I'm not doing much. But I keep things in perspective. And, I'd rather have my capital in my pocket to really hone in on a trade that I want and try to see something that people don't see, like a bottom or something like that, and really attack it full force instead of being short, getting squeezed, and having to reverse and disadvantageous to the position. So a lot of the things that I've experienced through life has really kind of created a style of trading that really has been, I guess, very advantageous for me as well. And also the people that our people in our group is learning the same style.
So here's my question for you. Patience is
Mhm.
like the holy grail, right? Every trader knows, from when you first start trading, patient, be more selective, be disciplined. Here's the problem though that a lot of people face. And, I practice patience to the best of my abilities. I didn't take a single trade yesterday. Today I took one trade. The problem is when you're patient, and then you haven't traded for a day or two, and then you finally see that perfect setup and you lose, and then you say to yourself, well, I was patient and I still lost. Now maybe I need to go quickly find something else because I'm growing more and more impatient. So what are some of the things that you sort of practice? Because I think that that's why it's so difficult, right? If you knew you were going to win, if
Mhm.
somebody told me, you know what, wait until Thursday, and then that trade you take on Thursday is going to be a win. I was like, no problem. That's fine
Right.
with me.
Right.
But it's that not knowing that keeps people taking trades over and over looking for that winner.
Yeah, absolutely. And it comes down to the fact that the market always draws people in, and you get that sort of hot hand fallacy. You win a couple, you keep on playing, you keep on to play the game. The more you win, the more you want to play, and teaching yourself patience comes from moments like my towel story. It's reality that I always teach people this. If you have $100,000 in your account, right, and you want to start trading, you should chop it up into $5,000 pieces, because it's that last 5% of your account that blows up that really teaches you the game. It's you struggling to keep account alive. You take a $100,000 account and chop into 20 different attempts to not blow up an account instead of losing it all in one go. Your education's really found at the bottom of the barrel when that account is struggling to stay alive. So if you lose 5,000 of that 100, you get 19 more chances to really struggle to try to get an account to grow, which in reality doesn't take any amount of money to do that. Any trader can build any account into anything they want, or achieve that they want to put their mind to. It doesn't, it's the amount of times that you it's the amount of times you try to do it and fail. And it's that moment of failure that you really learn the game. And so patience is carved in those moments. It's where you have that last resort effort. What do you do in that moment of insanity, right? Before you go crazy, about to lose your account, and you're like, oh man, that's all the money I'm ever going to have. And then you can't ever do it again. You learn a valuable lesson, and then you can't ever trade again. So there's a lot that comes from patience. And of what we've done, especially with rocket scooters, we have rules, and they're repeatable rules that tell you to sit out and stay out. And we call it a rational market. But in reality, it's when we can actually easily predict that the market's unpredictable. And in most days, it's somewhat in a range or stable. But when it's unpredictable and flat and choppy, like you said, you didn't trade yesterday, neither did I. Sitting out, market's flat. I wake up 5 minutes in, look at the rules. I say, bye guys, I'm off. I'm gonna take the day off and sit out. And it really was my journey to find rules like that, rules that teach me to not trade and to sit out when it needs to be set out. And the rule, it's capital letters, giant bold words in the Discord: get out, stay out, close down, click the X on your platform, and don't look at your phone for the rest of the day, and get up the next morning and check. Don't even sit by the pool and be like, I wonder what the spy's doing, right? Don't even look, just like let it go. And then next day, come back and train yourself to be like that. And that's really the best way to go.
I've said it so many times on the pod and on spaces just throughout that, learning how to trade is really just finding a bunch of things that don't work and sort of throwing them out the window. And it seems like that's really what you were getting at with breaking up that 100K account into smaller, different accounts where you can really get multiple different tries at saying, okay, here's $5,000. How do I attempt to grow this? As opposed to looking at it as I have $100,000. Let me try and make 10 grand. Let me try and make 20 grand. I think using that 5K rule, let me try and make 500, right? Let me make 10% on this 5 grand as opposed to 10% of my 100,000. Definitely makes it a little bit more manageable for a lot of newer traders. But look, that's enough. That's enough for the foreplay. The reason I really wanted you on this pod was to talk about this rocket scooter. Obviously, rocket scooter is extremely powerful. And if you could go into the story about how you sort of came upon building this, because you had we actually had a call last night, and that was just an amazing story. So definitely cover that. And then for just more in general, people who aren't familiar with the platform, what does it do, and how do you use it to help you remain profitable?
Yep, absolutely. It kind of started with the fallout of my initial failures getting started trading, and that was probably let's see, 13 years ago at this point. And when my first dive in was mostly technical analysis, like most people's dive in is that as well. You pick up a book, you watch a video, and it teaches you technical indicators. And most technical indicators take price and volume as an input, and then they try to predict what price will be on the outside of that equation. So MACDs, moving averages, the typical stuff that everybody picks up. And it's just, I know, engineer, as yourself as an engineer, you just realize that the stock market's not really predictable, and that just technical analysis always seems silly from the start. But most people struggle with it, thinking you're going to find some magic recipe and put it all together and it's finally going to work. In reality, it's, the trader is the one that does well in trading, and it's the risk management, the position management that does well, not necessarily the indicators. But I was determined to find some kind of different philosophy that wasn't technical analysis. Trying to predict where price is going to be in the market is kind of a fool's errand. But what we did, as an engineer, the journey was pretty simple. Back, I think about 6 years ago now, two other friends of mine, they were also engineers turned traders. we decided to really dive in and start looking at the mechanical side of the markets. All the books. The first book I ever picked up was written in the 90s when stocks weren't even decimalized. It was like eighths of a dollar. And I realized I didn't know I was reading a 30-year-old outdated book the first time I read it when I first got started. And I feel like a lot of traders have that as well. You don't know what's obsolete and you don't know really where to start. And so for us, as technical analysis is a way to kind of gauge where markets are overbought and oversold, it really has a flaw in that it can't tell itself when to turn off, when not to use it. A catalyst comes through, changes the dynamic in a snap of a finger. Your moving averages are going to catch up to that for hours or days or whatever, and you're forced to use multi-time frame confluence to really understand where that is going to go. And it leaves a lot of subjectivity to the trader, which basically means you give a brand new trader a bunch of stuff, and then they have a bunch of handles and buttons they have to push to get it to work. I mean, they're brand new. How are they going to understand how to trade with so much flexibility? It's like, here's an airplane, good luck flying it. There's no autopilot, and there's 1,000 buttons you can push, different time frames, different candles, and it's a whole mess. And we realized that, as a trader, you learn that in the technical analysis world, the only things that really worked well for me was volume profile and VWAPs and things that had to do with volume. And it kind of took me down this journey trying to understand, when you're looking where volume is going to be, is where other traders are going to be. It's a very simple concept. If I'm bullish, I want to be near the bulls. If I'm bearish, I want to be near the bears. And so how can I find where the bull and bear side of the market is without using, predictive price indicators, right? So we started reading mechanically, or started reading information and documents that were describing the mechanical side of the market, the modern market, things in the 2000s, 2010s. Once market making became an order flow game by high frequency trading algorithms, and you have all these different processes and procedures. The CME has the Globex with tons and tons of patents. All this stuff is public information. We just went through and read everything that was out there, as engineers are gluttons for pain when it comes to reading tech documents. We found out there's a lot of stuff out there, a lot of autopilot things that control and regulate the market, a lot of regulatory rules market makers have to follow. And we decided to take that route to pull out trade ideas from that. It's an instance, if everyone has to follow the same rule, right? Every market maker in town has to follow the same rule. Then what is that you can take all those rules and it's a consistent thing. It has happened every single time. Every time the market moves a certain amount in a certain day, there's a shutdown, right? The circuit breakers trigger. So we assembled every single thing that was mechanical and repeatable, and we built indicators around that. Our first indicator was an exploit of CME span, which is the program that sets futures margin requirements. We call it like the green lines, and now it's called doomsday. We have all these funny names for it. But what it does is it looks for an area of the market where there's just hedging that comes up. And it basically shows where volume will be at a price. So instead of trying to predict where price will be at a time, we actually found a way to predict where volume will be at a price, which is a lot different. If you're a trader and you want to buy S&P at 388, you want to make sure volume is going to come in behind you and kick it in the direction you're going. And it became an addiction at that point when the indicator was so good at what it did. Um, it would pivot so hard and it would have these volume spikes in the middle of the night. And we knew we were onto something. And it just led us down the path to create 14 different indicators that can predict volume. They're all completely different and they all exploit something different in some part of the machine that nobody ever decided to look at. So we're kind of the first group to dive into all of that and really try to give an edge to the average trader, because the game is basically rigged against us, So each one of our indicators looks at volume and liquidity. So those are the things that you don't normally see in technical analysis. Is a lot of really like leaning against where you can find volume at a price and where markets are liquid. Liquid markets have no desire to move in either direction. Yesterday, the market was extremely liquid, and that's why I set out. You don't really bet on markets spontaneously jumping out of the way. And liquidity just basically means buyers and sellers are in close proximity. The trades happen high frequency. If you really think about it, you pay a commission every time you trade, right? You pay an exchange fee. So the incentive of all the pieces up the ladder are to keep you trading as much as possible, just like a casino's incentive is to keep you inside the casino as long as possible. Because the more you trade and the more you stay in the game, the more they make $1 at a time from you for every trade you make. So the market's nice and liquid. Nobody has incentive to push it one way or the other. It'll stay put. It really takes a catalyst to kind of jolt the market the other direction or any direction. So We find when markets are liquid, you can sit out. Find when markets are illiquid, and you can ride that illiquidity to any of the pivots that we set up. And they're all pretty cool. And like I said, I invite you guys ever come check it out anytime. But we're on a path to create a whole bunch more this year. And I mean, we have this our group. We are even our members volunteer for project teams to help us dive into something new. We'll like assign a little project, and people just rise up and volunteer because it's such a cool thing that we're building. Everyone wants to kind of be part of it. It's rare to have a third type of analysis that's not technical and not fundamental. So we're really proud of what we've made, and we're glad that you guys are taking a look at it, and of course having us on to talk about it.
Yeah, I mean, how amazing is that story, right? I mean, that
Yeah, it fired me up.
that's what I was talking about. Like it's crazy. The part that really hooked me was it's not technical analysis, it's not fundamental analysis. It's like its own different type of analysis. And I think anybody who uses primarily technical analysis, I know that I do, I know that Alejandro does. I think that the part that you hit on that really becomes difficult is when and when not to use it, right? Like when I get, and we talk about this literally every single day, like when I get a trend day off of news or
Mhm.
whatever it is, and I see that the market's trending, I know that my trading strategies off of my indicators are going to be more likely to work than when the market is kind of trading sideways. Sometimes they'll work, sometimes they won't. When they do work, you don't get continuation. It kind of works for a little bit and
Mhm.
then it'll come back and reverse, right? And I think that's where people get really frustrated. And for me,
Absolutely.
it took so long, right, to be able to, even begin to create a framework in my mind around, okay, when am I going to use certain indicators and when am I not? And like you said, that really does take, months on months, if not years. And I think adding another style of analysis that doesn't necessarily, like you said, reflect on price and time, but more
Right.
so price and volume, I think that that's a completely new tool that people haven't been able to use yet. And so, yeah, I completely love what you guys are doing over there.
You kind of hit the nail on the head because the flaws in technical analysis are that they don't know when to turn themselves off. An indicator, if you're in mathematics, it's called the discontinuity, right? The averages are moving nice and steady, then all of a sudden price jumps 50 points, and the average can take a long time to catch up. So you need something else that's quicker acting, and volume at price is time independent, right? It doesn't require any amount of time to catch up. It's immediate. An example is, we have a thing we call it the playbook, but essentially it's a liquidity maps the name of the indicator. And what it does is it shows where buyers and sellers will be based on where we isolate market maker options from the general option stream. There's a lot of people now in the modern day taking trading platforms and indicators to the options world. A lot of engineers turned traders have figured out that an options contract is the most transparent thing when it comes to showing risk and liquidity. It shows you where somebody wants to be long and short the market at a price at a point in time in the future. There's no better predictive thing than looking at all the options out there. The difference is most of the people that went down that path stopped at just looking at all the options. Somebody's 1500 Tesla YOLO call is not going to be hedged against, but something that's near the money will be. And so what we decided to do to go even further was to isolate market maker options, which really they're going to take that position to hedge against trading against you or me when we're on the illiquid side of the market. An example is I buy, there's no seller. So market maker sold to me. They're not going to want to be short while the market's rallying. So they're going to buy a call and weigh it right by the delta of whatever the risk is they have. So if you have whatever, as the delta changes, they're going to add to the position or subtract to the position. And the net sum of all of that is just a constant pressure on the market based on everybody moving. Long-winded answer, but when you add it all up, we literally have a little graphical cheat sheet called a liquidity map, which shows you where buyers and sellers can and will be at any point in time that you want to do. You can pick a date and it'll show you where the bulls are and the bears are at that date on that expiration. It's a really neat thing. And we call it the playbook because where the market's illiquid and you're on the wrong side of the trade, you just get out of the way because it's going to fall against you like a rock in a pond. So the playbook is kind of a neat thing. It's kind of like a nickname for it, but we call it's liquidity map is our main bread and butter. And essentially, when you're trading, when price lowers, the market's looking for buyers and price raises looking for sellers. And if you have that mapped out at the beginning of the day, then you can isolate all the prices that are there to maybe 3 or 4 action points and not look at all prices that exist as something that means something. I remember like today, the SPY, we broke like 388 and a half and we knew it was falling to like 385, right? And so anywhere between there, there's no reason for the market to bounce. There's only one place where buyers likely could be. And so I'm not in there jumping in early for every dip that comes by or shorting every pop. And I only try to play the game when I know buyers and sellers are going to be there and the options will spell out that they're right there, right? So it's really neat to map out trades before I take them. And of course, if the map shows that there are buyers at a place and I do decide to buy, um, and you get there and it falls through, then I know, well, why did it go against me? The map shows there's buyers here. Well, there weren't buyers. It doesn't matter why. It's the new thing of trading. When news goes against you, you're normally like, well, why was that market rallying on that bad news? I don't understand. It doesn't matter. You don't have to understand anymore. You just have to know it's going against you. And that's the place where buyers should have been and they're not there. Well, where are they? You don't care. You're the retail trader. They're institutional. They've got information faster than you. They've got insight information. They've got all kinds of stuff you don't have, and speed you don't have, and money you don't have. Whatever reason they have is good enough for me to get out of the way the first time I see them getting out of the way, right? So that whole style of trading is to try to mimic what institutions are doing and kind of put that power in the hands of the retail trader.
I
How
love
many
it.
times do you guys
Awesome.
listen to the news, right? Bad news. We had the unemployment numbers go up and then, or the unemployment filings go up and the market rallied. Like bad news is good news, right?
Yeah,
And it takes all, you can't sit there and try to develop a very complicated thesis when your trade's underwater. It's really hard for the average trader to do that.
that's very
So
true.
it's a get out of
Yeah,
the way.
we're always like, even this morning we had some data release. I think it was PMI at 9:45
Mhm.
and 10, and we're trying so quickly to interpret it. We're like, is this good? Is this bad? Is like, I completely understand what you're saying. The market was moving really fast at the time too. So, but I want to ask you about your trading. So you're trading what? Options, futures, common stock. What is it that you're actually trading?
A little bit of everything. On my stream, I live stream on YouTube every single morning, and I do a mix of options, futures, mostly options and futures these days. I do have some stocks, but mostly there's a whole combination of why I do what I do. Back in the day before Rocket Scooter was officially launched, I actually did a small account live trading challenge on YouTube, fully transparent, showed the stats, showed the account history, and I basically just traded futures just because I've always traded futures. Most traders don't know the benefits of trading futures. There's a lot that goes into it. It's very risky if you don't know what you're doing. But if you do know how to control it, futures has better tax breaks. You can trade around the clock. You can hedge. For instance, you buy options at the end of the day and you're stuck in them overnight. You can't close them out till the next morning. And all of a sudden, overnight market's sinking against you. You can always short some futures contracts to hedge. So I usually mix a combination of day trading and scalping futures on the stream. Like today, I actually scalped some Nasdaq futures and ES futures, but I'm also swinging and day trading options as well as my demonstration of rocket scooters. So it's a little bit of both. There's different reasons to do both. In some environments, it's good to buy or sell options. In other environments, it's good to just have a little bit of cash just set aside just so that you can hedge with a very leveraged up position in futures. So it doesn't take a lot of money to hedge an upside down options position by shorting or longing futures on the other side of the market. So I'm always keeping my account balanced that way to do both. I think because popular to trade options these days, and a lot of people dive into it because options are very inexpensive to trade. They're also the hardest thing to trade, and a lot of traders don't know that. When you're picking a stock, you're literally buying the stock, and it either goes to zero or goes to infinity, which is cool. You can't ever go negative buying a stock if you're not trading on margin. But when you trade in options, you have to kind of pick a price at a point in time. And not only that, how it gets there. It's if it gets there all choppily, you're going to lose a lot of the value on the way. And so there's all this complexity in options that most traders don't understand, but they get into them because on Twitter, Lotto Friday, and everybody's like, I made 17,000% on this one trade. And somebody's like, oh my God, he turned 50 bucks into 5 grand. I can do that too. And they really dive into such a complicated thing and not really understanding what they do. So because of that, I taught myself how to trade options a couple years ago just so I can do it, just to show people how to do it the right way. So I'm myself an options student along the way, even though I built Rocket Scooter around understanding how options work and how Black Scholes and the other equations work mechanically. Trading options, as you know, is different than reading about it in a textbook. So myself demonstrating trading options live on stream is probably putting my own trading in hard mode where people are watching me trade and I can mess up while people are watching me. Makes me really take myself seriously, right? To not do something stupid. And I really like that. And so, and like myself, it's been a couple years trading options and uh, getting the hang of it pretty good, but I'm also learning all the nuances as well. And I'm also learning from other friends of mine out there who also trade options, teaching me little bells and whistles of the actual trading part of it. So picking up tricks along the way. And then, of course, regurgitating what I learned to everyone else. But yeah, every morning I wake up, like essentially, I don't know if you guys saw my tweet back in the middle of October. I was kind of Babe Ruthing and calling a bottom for the year. I did this once earlier this year called like a 2 month bear market rally in July. Kind of got it right. I built a fundamental thesis. I don't just trade off of the numbers. I build a really solid thesis, and I try to look for something someone doesn't see, and then I really detail why I'm doing something fundamentally. And then I really look at the numbers, and the numbers say, okay, now's the time to enter. And that's what I did. I got into a lot of options trades. I got JP Morgan before it rallied up, Apple, Nvidia. So I basically closed everything out on Friday, which was a good thing to do, except for my Google and Apple. So when those things tanked, I loaded up. And yeah, I'm betting on those guys by the end of the year. And then I've got plenty of cash just to go in long at the end of Fed. So definitely bullish till the end of the year. So um, yeah, so this was a kind of a good windfall for me, to be in some really decent options trades. I think my JP was up like 1100% whenever I finally cash out of
Wow.
it. So, yeah.
So that was a swing trade.
Hmm. Yeah.
Wow.
Yeah.
Awesome stuff, man. Yeah, you talked about futures.
Hmm.
So I recently started trading futures about 2 months ago now, completely transitioned from trading options. And oh my God, immediately it was like, yeah, I mean, it's just awesome. Like, and I've been saying
Oh, nice. Yeah.
exactly how you were saying it. It's like everybody gets kind of sucked into the
Hmm.
options market when you're first learning. And I'm now like telling everybody, I think, if you're starting from day one, you should be trading futures.
Hmm.
Like that, like
100%.
I mean,
The same thing.
it's much, much, much easier to trade futures versus trading like SPX or SPY 0
Yes.
DTE. Like that
Yes.
is so difficult to do. But I think that there's that like you think about futures, and this is how I used to think about it. It's like, oh, that's like what the big dogs are trading. Like, oh, you're trading the futures. Like what? It's not like that at all. It's like it's very simple. It's like you versus the chart is what I like to say. It's honestly highly recommend it. So guys, if you're listening to the episode right now and you haven't touched the futures yet, I know that a lot of our Discord members are starting to trade them with
Hmm.
us as well. And there's plenty of brokerages out there where you don't need crazy margin requirements, which of course you have to be careful with because I mean, as you mentioned, there's a lot of risk there, but it's very
And I'll
doable for
let you know
anybody.
by the end of the year, Rocket Scooter has the ability to tie into other brokerage accounts. We're not going to become a broker ourselves, but you'll be able to trade through your accounts through our platform. So you'll be able to log into a multitude of brokers, options brokers, futures brokers, especially, and use our platform with the DOM, and it will connect to your account. You can also trade through it as well. 100% agree that futures is the place people should start. And the reason they really don't go there is just because the futures industry was always smaller and actually slower moving than the equities industry. And so, the competing New York and Chicago worlds, uh, it's like Coke and Pepsi kind of thing. They're really pushing to catch up because they really understand that their product, quote unquote, futures is a much easier product that's designed for the newer trader because they went and created micro futures. And now there are exchanges out there that created nano futures, which is a subdivision of micro to make it even smaller. I can't remember the name of the brokerage that does the nanos, but you can trade them through Tradeovate, if I remember correctly. And it's like you can buy, if the S&P cost, it's whatever it is, and a nano is like 1/100th, I think, of the actual price. So I mean, you're paying like a couple bucks to make a couple bucks. I mean, it's you can subdivide as much as you want. And with all the complexities of the equities industry, to be a pattern day trader, you need 25,000 in your account. So most people go into trading options in a cash account, and they start,
That's
it's
another
it's
huge
all so
thing, not,
difficult and all these hurdles. Yeah.
no PDT. That's massive.
No, there's no PDT. You can trade in hours. Like for instance, if you bought any kind of option, for instance, you bought Apple calls and Apple tanks on earnings, you're kind of stuck right at 4:15 Eastern. Except you're not, because you can short Nasdaq futures at that time. When your options are locked down, you can't trade them on the equities market. So when you are trading futures, yeah, no PDT, no account minimum. You can subdivide down to a couple bucks. There's the 60/40 rule, which means once you're profitable, you're paying 60% tax rate on long-term capital gains
Right.
tax. So basically, when you average it out, for every 100K, effectively, you're putting 20K extra in your pocket if you're profitable just trading futures alone. And most professional or full-time traders that I say professional, most full-time traders that sit at home and trade, most of them get smart to that and really do all their scalping through futures. You pick your big plays, like my Google's my big play if it takes off. But in reality, I can hedge that indefinitely by trading futures. And if it's a hedge, Uncle Sam taking a lot of my hedging power away from me, because I actually will pay less on the gain if it's trading futures as opposed to trading anything in the equities market. So it's a cool reason why they did that. If you think back in the day, futures were designed for farmers to hedge things like droughts and supply. And farming is heavily subsidized, which means the government puts money into it to keep prices cheap. So the government essentially allowed tax breaks in the futures industry by allowing taxes to be less, because you wouldn't subsidize an industry and then tax them heavily on the end of that, right? So it's a neat little
Right.
thing that's always been there. And then when of course, the CME Group made pure gambling instruments like S&P futures and Nasdaq futures, they don't settle in like bushels of wheat or barrels of oil. They literally settle in cash alone, which means they are purely gambling instruments. But because they're in that same futures industry, they get that same tax break, which is why people didn't notice that, why they're going out there struggling trying to trade SPX options and SPY options out the door. Already you're taking a tax hit, even if you're lucky enough to become profitable out the door. So if you're going to trade the indices, there's no better thing to trade than futures, period. I mean, and a new trader can easily get into futures, and then of course not have to deal with all the hiccups of PDT and things like that. So I always tell people, when you get started, trade micros. You can put a couple $100 in an account and just, play it that way and not really have a lot to worry about. And the scary part about futures too, where that these people say futures are risky because they're highly leveraged, and you can control the leverage by buying as much as you want and just not using any margin. And same thing when you're trading a cash account and options, you shouldn't use margin, because the smart thing to do as a new trader is not double down on your losses by borrowing money and losing it faster. But in futures, you can control however much you pay for it. So if the CME Group says it costs $10,000 to buy this contract, and your broker says, "Well, we'll let you pay 500," you should still pay 10,000. So don't lever up, and then you keep that. It's a rule that we teach people as well. And you're basically trading equivalent cash account like you would in options. So you're not leveraging up any more than you should. So there's a lot of ways to control and keep that less scary. And the stigma was that futures were always scary and the big boys did it. But in reality, it's, I think, the fastest growing segment for retail traders. As they're
Yeah.
realizing that options is the quickest way to burn your account to zero. Futures have a little bit more control, right? So
Does your Rocket Scooter platform work just as well for individual stocks for people who still want to trade options and risk their shirt, or is it more like focused on the indices, ES,
sure.
SPX, things like that?
Everything, anything that has options, we can give you liquidity maps, hedge pressures, everything for. We have a scanner that looks for setups. I mean, for instance, if you want to look for bullish setup for a certain type of liquidity map, for instance, you can search for any stock in that setup. So today the S&P broke through a key hedging level and was crashing. I can now go look for stocks that are following that same path that haven't broken their hedging level yet, so I can find stocks that are moving with the index that haven't crashed to a certain level yet as well. So I pull stocks out all day long and do all my plays from that. So when I picked JP Morgan, Nvidia, and the stocks I pulled out, Pepsi was one of them as well during that swing. I got them all basically from the platform. I was looking for a certain thing that we teach people to look for when markets are selling off, and those were the ones that looked the brightest, and those are the ones that ended up doing the best. Now, again, I can't say that like my platform will make you money. We can't say things like that as a as a technology provider. So my personal trading alone, just to be fair, I've been trading for a very long time, and I'm not so terrible at it anymore. But I did use my platform to pull the ideas out and make my trades with for sure. But we do teach people how to do that as well, and we're really adamant on making sure everybody's very thorough about how they invest and how they trade their own money and make their own decisions. So that's really big for us to want to empower people to be really smart when it comes to trading. Absolutely.
I mean, look, I think that's really how we ran into you and sort of, you know, ran into similar people, obviously through AJ and whatnot. I think it's really the people who are not only showing that it's possible and not only showing a track record over a certain period of time, like you said, you had some struggles, you were able to overcome them. You have 10 years of experience. It's not only that anymore. I think the people who really stand out nowadays, particularly in the retail community, are the ones who are willing to teach you how to do these things, right? As opposed to just, hey, I made 50 grand today, come sign up for my Discord or whatever it is. Um,
A lot of that.
because really a lot of people, especially the people who are left, I assume that, a lot of the market was flooded obviously during COVID. We had, all of the stimulus, everybody was in the market yellowing their stimmy checks on Tesla options, right? But if you're still left a year later, you have to take this at least relatively seriously. And I feel like those people are really looking for, okay, I see that it's possible. I see that other people are doing it. I don't want somebody else to do it for me. I want to learn how to do it for myself. And I think that's where you guys are doing a great job, um, all over Twitter and all over the community.
Thanks. Yep. I think that COVID. Well, actually, it's funny, and I kind of can relate because when the stock market crashed in '09 and market was rallying up in 10. Usually after markets collapse and when they're recovering is when layoffs tend to start, right? Companies are struggling at the bottom. They take a few quarters to finally decide to lay people off. I mean, that's basically like I'm from that generation. That was almost like COVID, right? You're losing your jobs and then you take your, the severance package and throw it into the stock market, just like everyone took
Right.
their stimulus checks and threw it in the stock market. It's a pattern. And it's like this time around, I get to be the grandpa and teach the young kids how we did it back in the day. So neat. It's neat that I can relate to that. The problem, the difference is the people that are coming in are um, more they're becoming younger and younger. The demographics becoming very young for the retail trader. People are being, it's social media because the promotion of trading and the gamification of trading is everywhere. It's on everybody's phones. It's on TikTok. It's on Instagram. So everybody wants to be a trader. There are people in junior high and middle school talking about trading. I mean, I think the first time I ever even looked at anything was when I was like, oh yeah, I have a 401k. I was like, a couple years into the workforce, I'm like, oh yeah, I do have a 401k, don't I? How does this thing work? Right. So it's so easy for people to dive into trading. And COVID created a wave of people, not only a wave of people, but the other side of the coin, it created a wave of educators. And the problem is everyone, it's like, how do you become a really good piano teacher? Is you just stay one lesson ahead of your student. You're seeing a lot of that in the stock market where people watch a video or two and all of a sudden they may become an influencer in the stock market, which is different than being an influencer on, Instagram where you're taking photos or something. But influencer in a stock market's dangerous because people will follow you and people will listen to how loud you are and think you know what you're saying and really believe you and invest their money in you and in your ideas and then lose everything. And I think there's this ethical obligation of people, especially in my situation, to really, dispel that idea that you have to have a track record. You have to go out there and ask everybody who's trading or showing you they're trading or talking about trading. I don't care how many followers they have. I don't care how big they are on social media. You need to ask anybody that wants to take your money for their trade room, the 200 bucks for their Discord, their $10,000 for their trading course, and you demand a broker statement before you even pay that money to see that they're just really trading real money. I mean, you don't have to be super profitable to be a good educator, but you have to at least played the game with real risk on the table. And a lot of these paper traders go out there and start teaching day trading courses and they're trying to build their own business because they lost their job in COVID. And the problem is that they've never experienced any real risk. And it's almost like saying that you're going to teach people how to fly a plane when all you've ever done is sat in a simulator. It's not the same. And there's a lot of that out there. So just as part of what I'm saying here is that everyone out there, don't let anybody talk you in circles while you're trying to ask them for proof, because there's this kind of called like the guru song and dance. You have a right to demand that somebody shows you they really trade if they're asking you to give them money to teach you how to trade. And they'll do every trick in the book to skirt it, but do not let them deter you, because it's your money and your investment. Just like a trade, I vet every single thing I do by researching and trying to get in and study and learn about what I'm investing in. And if you're investing in a person, it's just like investing in a stock. Do your homework and do your research.
Yeah, man. I mean, for better or for worse, Noah and I are not paper traders, and anytime we lose money, everybody in the Discord knows about it.
Yeah.
But I mean, it's so true, and I don't want to point fingers at people because
Yeah.
we
Um,
see it all the time. But man, I mean, the paper trading is one thing, right? It's like it should. A lot of this stuff, though, you kind of have to look at it, and I almost ask myself, like, you would think people are at least smart enough to do some sort of research, like look to see if the person is actually making money, if they're risking uh, real money. That's got to be like step one. If you're falling for some of these tricks, like it's one of those things where it's like, unfortunately, I can't help you. And I mean, I hate to say it, and I hate to come across as like an ass here, guys. But I mean, if you're joining a Discord where
mhm.
someone is paper trading, like if you're not smart enough to stay away from that,
Yeah.
maybe let's not trade options.
And even
I
if
mean, like,
and it's not like it's like paper trading isn't a terrible thing as long as you're honest about it. Like
well,
that's the
that's the thing. That's
thing.
the
Yeah, if
thing.
you're like honest and like, hey, I'm paper trade with me, then that's a great thing. But if you're like, oh, I got this Lambo, and you're like, you know what I mean? It's that like that's
Yeah.
the
Yeah.
jarring part. Yeah.
Yeah, it's the it's like the flashy it's the act, right? It's the
Yeah,
act.
we call
It's
it like trader porn, or they flash
Yeah,
all
and
the
that really
yeah.
stemmed from like the COVID market when,
Mhm,
you know, I mean, quite frankly, like there were people making like ridiculous amounts of
mhm,
money, but I mean, we'll never see something like that ever again. But that became all of a sudden the norm. It
mhm.
was like, you know, I want to learn to trade so that I can go buy three Lamborghinis
Yeah.
versus I want to trade so that I can generate income like that.
Yeah.
I mean, like Noah and I over the weekend were just talking about
Mhm,
like some of the standard that people set. It's like, you see somebody who makes if you can make $5,000 in a month,
mhm,
that's really good. If you
mhm,
can make $10,000 in a month, that's great. If you
mhm.
can make $50,000 trading in a month, you are like top of the
Yeah.
top, right?
Yeah.
If you're making six figures, you're doing something right. Like, but people think that's what success looks like. It's not the $5,000. It's not even the 10
Mhm.
grand. It's the 50K. Until I get to that, I haven't made it. You know, and Matt, not to put you on the spot, I know you make a lot of money trading and you post your gains picks, and it's awesome to see. But now talking to you, it's like, you have 13 years of experience, and then somebody who's new to the market is going to expect to make the same amount of money that you're making
Right.
versus, you're telling us stories from 2008. I was folding towels, shitting my
Yeah.
pants, losing all my money. People don't like to think about that, right? Like
Yeah.
you've come a long way. Like everybody wants it tomorrow,
Yeah.
right?
Well, it's a mentality, right? So I didn't start trading. I mean, as you being an engineer, we weren't necessarily starving in our career. An engineer is a very lucrative position. Paychecks are nice. You live a very comfortable life. And when I got into trading, it my mindset was never I need to buy a Lambo. My mindset was I need to keep up my Mazda 3 payments. So I need a career, right? So it was very much different. It was, trading was a potential career path when I approached it, not a means to get rich. It was a means to do something challenging that was like engineering. It was a puzzle to figure out and get paid for it at the same time. My goal was never to I never it never even crossed my mind to buy something fancy or to look at the money. I think the mindset comes from just the flashiness of the modern day and social media. Everybody sees it and then they want it. There's nobody flashing anything. I was actually reading trading from books. You guys remember bookstores? Yeah, I would buy actual books, right? And so it's a different world we live in. And it's hard not to ignore because it's in your face. But yeah, I beg people to ignore the flashiness because, like you said, a successful trader is not a trader who made a lot of money in a trade. A successful trader is one that wakes up and looks at the market and says, I'm sitting out today. Doesn't look right. And then they do. And everyone else is struggling and upside down. And they're sitting at the pool with a drink and relaxing and saving their emotional capital for the next day when the market may move. It's learning when not to trade, I think, is the idea of success. And there's no monetary value to a loss of zero and a gain of zero. The real success is control. And we hope to instill that in traders every single day. And most of our rules are when not to do something, not do something now. And the approach has essentially you're doing less, you're trading less, you're feeling better, you're not always stressed out, you're not flip-flopping your positions. We have a rule, don't ever flip-flop. If you're wrong and you're long, don't go short. Get out, stay out, try something else. All of those rules are designed to keep you in your emotional game, which is the hardest part of traders control, in check and actually, rigorously train you on those type of practices so that you do the same thing every day. And I think that's the sign of real success of a trader is being able to control every single aspect of what you do. In poker, it's the same thing. It's not the flop that gets you to the final table. It's how you bet and how you manage risk with what's dealt in front of you that really keeps the same people in the finals every single time. And those type of mentalities they're only shaped. Very few people are savants in trading, and God knows I wasn't one of them. But it's carved over time and usually through loss. And so we want to filter people into an idea, or not filter, or push them through a filter that is showing them that you need to practice losing, but losing small and having control. And unless you're certain about the trade you want to do, sit out, sit out, sit out. And it's funny because back in the YouTube stream back in the day, I did the small account challenge. It actually was futures, and I started with the $6,700 account, which was half the margin requirement at the time for the S&P contract. And before I stopped that stream to go develop Rocket Scooter, we had the base. We had one app that we made called the Classic app, but then we turned it to a big platform. The last day of the stream, the $6,700 account was 95,000, and I scalped futures the whole way up.
Holy shit.
Had like an 80%, 75, 80% win rate. And I actually showed the graph on the stream that showed the account history with the account number. There was a rule the DOM never left the screen, so I didn't accidentally like move the screen when I was losing. It was always there every day. And the whole point was to prove that point that control was the way to get there. And then I went on like a 74-day streak of not losing a day, and 15 of those days I sat out, which is a lot, right? And it was weird because trading streaks are rare, but I got lucky. It was always obviously post COVID, so the market was bullish. So there was a lot of not a lot of bear bias. Just buy the dip, and uh, I was using rudimentary portion of Rocket before we built Rocket Scooter. I was using the Classic app to do all my trading with. And the point I'm saying is this: is that the reason that the streak continued was because I would pick days to sit out, and I was very picky about what I did, and I just slowly grew the account. I think it was about the total was about, I think, a 9-month period that I was actually doing the trading. And the point of that was that, like you said, starting with $6,700 is very relatable to a bunch of people. A lot of people are going to start in that range, and just watching you trade one micro and then step it up to two and step it up to four, then to eight, and then building it little by little was a great, um, I guess, educational path for a lot of the people that are now all Rocket Scooter members because they followed me through the whole journey and they themselves learned from my mistakes and my problems on the stream. And again, I always was preaching the same thing we said earlier, was that success is about control, and waking up and choosing to sit out is very empowering, right? And so all the stuff we developed in Rocket Scooter, liquidity map, resilience, all these cool indicators, that we made, mostly are designed to show you when to sit out, when the market doesn't make sense. And if all things line up and make sense, nail it, get it, hit it hard and go for it. It's kind of cool to see it. Yeah.
We're gonna go ahead and wrap up here, but this was a great interview, Matt. Really appreciated having you on. I mean, your story is very inspiring. Obviously, I think that a lot of people are gonna be able to relate to it. The folding towel story. That's good. That's one of my new favorites. But
Yeah.
yeah, I mean, Rocket Scooter guys, check it out. We'll go ahead and throw the
Mhm.
link in the show notes. So for anybody that's
Mhm.
interested, they can go ahead and head on over. I know that Noah and
Good
I will
to-
definitely be checking it out ourselves. But Matt, Trader's Paradise, awesome
Yeah.
having you. Thank you so much for joining the show.
Yeah, absolutely. You guys can check it out. There's a 7-day free trial. There's no credit card. Just, jump in, check it out, and play with it. And then, of course, we'll be live streaming on YouTube every day. So you can come in, follow my trades, ask me questions, find out why this crazy guy is calling a bottom in the middle of a bear market for the rest of the year. Whatever you want to talk about, we're here. We have a huge community. The Discord's even free. I mean, anybody, y'all are welcome to come by anytime. So I appreciate you guys having me on for sure.
Awesome stuff. Another great episode, Noah. I'll see you next week for episode 54.